All right, traders, I'm going to show you how to identify the key levels to trade the best setups at the best prices heading into this week. We're going to be creating the trading plan step by step. This is going to show you exactly the key levels to be buying the dip, buying the support, buying the call options, and the key levels to be short selling the resistance, buying the puts, where to have your max risk, where to set your profit targets. Let's get straight into the analysis. Towards the end of this video, we're going to be discussing the strategy along with an overall market analysis on where we're at. So in terms of the trading plans, let's get straight into it. So in terms of the first trading plan, here's what I want you to understand. The SPY right now is gapping up. If the SPY opens up higher than it previously closed at $388.08, that means it's going to have a gap up. If it opens up lower, that means it's going to have a gap down. So here's the first plan. This is the first plan if the SPY gaps up. This is what you're going to want to look for if the SPY does gap up. So what I want you to understand is in terms of the SPY, this is a macro support level. Your macro support was at $390. As you could see, once it bottomed at 390, once it bottomed at 390, it would shoot up overall about 20 points to the upside. Well, once that macro support level cracks, instead of going up 20 points, it's going to do the inverse and it's going to start to drop about 20 points, which is exactly what had occurred. Now, with that being said, this is what I want you to understand. This 390 was your previous macro support. And you could see there was also a gap to fill at 389.63, right? So why is this such a unique special level to be short selling and to be buying put options? Well, first of all, the macro trend is bearish because support cracked and SPY dropped like almost 20 points from that support level, right? Now, with that being said, when the SPY has an overreaction for the micro, for the short term to the upside, and it instantly rips back up to fill this gap and to touch that previous support, that's when the macro trend is going to tell the micro trend, the short-term trend that, hey, we're due for a short-term pullback. We're due for a short-term reversal because this support level cracked and it had a massive drop. Therefore, the first time it goes back up to that previous support level, and the first time it fills this gap that's waiting to fill above at 389.63, it's going to try to have a pullback. The macro is going to tell the micro, hey, let's have a small pullback. Let's have a small reversal. So obviously, since we're towards the top end of the channel, along with the information that I just shared with you, previous macro support is going to tell the micro uptrend to have a short-term pullback, a short-term reversal. Also, gap close reversals have been working 100% spot on. Due to this reason, I'm going to be interested in put options. But I am well aware if the SPY breaks above 390 and forms a floor at 390 and reacts as a support, there's no reason to be puts, and that will be my max risk. And I will respect my max risk and cut my loss quickly if I chose to enter a trade towards that level with bearish confirmations, of course. Because I am well aware, if my key levels, the best levels to be trading at, don't work, I get stopped out quickly. Because if 390 turns into support, the SPY is going to try to blast off to 395. And there's also a gap to fill above at 399.40, right? So with that being said, here's the game plan. Now that you have a better understanding of it, this is what I want you to be aware of. In terms of the SPY, there's a gap to fill above at 389.63. It topped out at 389.18 and it started selling off, having a partial gap close reversal. The put options went up 200% if you got in towards the close on the same days. Absolutely crazy, right? So if the SPY gaps up, if this does gap up, if 389.63 to 390 reacts as a resistance, it's forming a roof like it already is here, like it already is here, like it already is right here, then I'm going to look to play the puts at 389.63 to $390. Now, in terms of your profit target, this is what you need to understand. If you're buying puts at that key resistance at 389.63 to 390, the price target is at $388.08. It's a quick scalp where you can make a nice quick return if you're buying on the upside. Now, this is where the serious trade comes in. Say the SPY goes green to red, or say it gaps down. If it gaps down tomorrow, then you wait for it to go back up to the previous closing price of 388. If 388.08 reacts as a roof, as a resistance level, see how it's reacting as a floor, and then it starts to spike as a floor, then it starts to spike as a floor, then it gaps up, right? If it cracks below this and forms a roof and forms resistance, I will look to scalp puts at 388. So my first zone, and this zone is mainly if it gaps up, is going to be 389.63 to 390. Now, if the SPY gaps down, or if it just goes green to red, my second level for puts is 388.08, right? Now, if 388.08 cracks and reacts as a resistance level, what's the profit target going to be on that trade, right? So if you're buying puts at the higher level, the first profit target is at this 388.08. If 388.08 cracks and reacts as a resistance, you could look to get in puts again. The first profit target is going to be right around here towards this 386 level. 386.40 is where I would lock in profits. That's the plan. That's the strategy. Previous macro support, test for the first time, reacts as a resistance level. The gap fills at 389.63. SPY has a reversal and it comes crashing back down to start to downtrend a little bit, right? Now, here's another level that I want you to be aware of, and this could be a potential dip buying opportunity. So I have two potential dip buying opportunities for you, and we're going to be going with the lower levels, not the higher levels. We all know if SPY bottoms at 388, if it breaks above 390, it's going to have a nice rocket. But as you know, I don't like buying breakouts in a bear market, and I don't like buying the top of the channel saying, okay, it's going to break out this time. 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 That's not my strategy. I don't buy high and sell low. I don't buy breakouts. I don't buy at resistance levels. I will look to short them with a very small risk, with a very high reward ratio, right? Now, with that being said, in terms of calls, this is what I want you to understand. This would be the first level and the higher level. So it's not the best level and it's not a special strategy. This is just price action. But I can see a bounce at this level initially. I believe this 384 level, you could see right here, once we had a breakout above 384 and turned it into support, there was no reason to hold puts, which is what I told my team. My team and I, we played puts at open when it hit 384, 50% in minutes, and then I called it. And then once it broke above 384, I said it's bullish. It just broke above 384, had massive support, and there's a gap to fill above at 389.63. Therefore, as stated in my key levels, remember the best level for puts is 389.63 from here, gap close reversal. There's no reason to be buying puts because SPY is bullish at that 379.38 gap to fill below. It's bullish, reacts to support. I told people this is where you should be buying puts the first time. It worked out perfectly. This is where you should be buying calls first time. After that, no other trade unless it goes to 389.60, which it nearly did, and it worked again. 3 gap close reversals. Look at this, man. The strategy worked 3 times in one single day. It had a gap close reversal here at 384-ish. It had a gap close reversal right here at 379, and it had a gap close reversal at the 389 range. 3 times. You could have used the strategy in one single day. Right here, let's go further back. This was the best trading week of this 2023. This is one of the best and easiest weeks to be trading along with the strategy. There was a gap to fill above right here at 386. It fills the gap at the higher end of resistance. It sells off to fill the gap below. Right here, there was a gap to fill above at 383.44. SPY gaps up, it fills the gap, it has a reversal. Once it fills the gap that's waiting to fill below right here, it has another reversal. Do you see how these white lines are literally exact tops and exact bottoms? If you're using the support and resistance properly, this is the best trading strategy in the game, and I will consistently look to use this strategy. And we are towards a very attractive higher end of the channel with the strategy. Now, in terms of the call level that I was talking about, I do believe initially, and again, this is nothing special and this is not a gap trading strategy. This is simply just price action, which is not the best thing to be doing. But I do believe we can see a bounce initially at 384. I'm going to keep an eye on this 384 level. SPY had a nice breakout above 384 here. So if it just pulls right back to 384, we should see a small bounce initially for a quick scalping opportunity. I can see that. Now, in terms of the best level to be buying calls at heading into this week, $379.38. There is a gap to fill below at 379.38. That is going to be your best level to consider scalping calls heading into this week. So in terms of the short term and in terms of our micro levels of trading, there's going to be an opportunity for puts on that zone, like I stated, 389.63 to 390. There's going to be another opportunity if 388.08 reacts as a resistance level, SPY goes green to red, or if SPY gaps down, it goes back to green, then it goes back to red, right? As long as it goes green to red and forms a roof at 388, that's another opportunity for puts. 2 opportunities for puts. One is a zone, one is a lower level at 388. The zone is 389.63 to 390, right? In terms of calls, not using the best strategy, not using the gap trading strategy, just a support level where I can see a bounce occurring, which was previous resistance, is at 384. We can see some sort of bounce right around this 384 level for a quick scalp. These are all quick scalps. I'm going to keep an eye on it. Is that the best trade? Is that what I teach? Is that what I preach? Absolutely not. That's just price action, nothing special. In terms of what I teach in the best setup at the best price, there is still a gap that's waiting to fill below at 379.38, right? So that's the game. That's what we're doing. Right now, we're towards the top end of the channel. We're looking to play for the gap close reversal. We're looking for bearish confirmations. Once we get back towards the lower end of the channel, we will look to scalp calls. In terms of the middle, where we should see some sort of bounce initially, and I would not want to be holding puts the first time I tested this level, would be at 384. Those are the overall targets. That's the game. In terms of these prices, I'm looking to have like a 2-point move in my favor. SPY goes about 2 points in my favor. I get out from the levels, right? So that's the overall game plan, man. Super simple scalps at the money. Now, in terms of the overall market, now that we're done with the plans, this is what I want you to understand, man. So as I have been teaching on this channel since day one, this is what is going to be leading to our success. It's going to be gap close reversals. Gap close reversals is the best trading strategy that I've come across. It's the best trading strategy that I've created. Anyone who thinks they have something better, feel free to post it, because I'm telling you, I am very good at identifying, catching trends, catching patterns, and seeing in terms of, okay, if I want to develop a strategy where I get in at the exact top at the resistance level for puts and the exact bottom, the low for calls, this would be it. This is the best trading strategy that I've ever seen. And it's working like a magnet. It's unbelievable on how well it has been working the first week of 2023. Look, let's look at the 5-day chart here. This is the first week of 2023. Let me show you the 5-day chart. There was a gap to fill above at 386. I said that was the best price for puts. The first time it filled the gap, it reacted as a resistance. It sold off very, very hard. It had a gap close reversal. Right here, SPY gapped up. It came crashing back down to fill the gap below. Once it filled the gap below, it formed a floor. It had a reversal. Opportunity for puts at the top, opportunity for calls at the bottom. That's 2 reversals, right? Tuesday, Wednesday, 2 reversals already. Let's go to Thursday. Thursday, there was 3. That's 5 in 1 week. Look at this. There was a gap to fill above at 383.76. I didn't trade here because it didn't fill a gap. People are like, well, why didn't you trade? Why didn't you trade on Thursday? Because it didn't fill a gap. On Friday, there was 3 trading opportunities with my strategy. I bought puts at the exact top. That was my plan. Once the gap filled, and it had a reversal, and it came crashing back down to fill the gap below. Once it filled the gap below right here, it had another reversal, back-to-back gap close reversals, getting you in at the top for puts and the bottom for calls. And then there was a last reversal into the close. Remember the gap at 389.63? Look, man, let me go further. It's incredible. There's nothing like this. There was a gap to fill right here at 386. It filled the gap, had a reversal. There was a gap to fill here at 389.63. It nearly filled it, had a reversal, puts one up 200%. Do you see the opportunity? That's the strategy. So Will, how much trades is there going to be with this strategy in terms of an average? There's going to be 3 to 5 every single week, both ways. Long and short, in total, 3 to 5 opportunities. You compound the account, you cut your losses quickly, you get in as close as possible with the confirmation at the gap, and you do not risk much. If it cannot work in our favor at the best entry possible, it is not going to work, right? So for an example, let me show you what I mean by that. We're talking about the upside, and we're talking about the beauty in the green side of the trade, because that's all it's been for me this week. Every single day was green. Every single day was successful because I planned these trades ahead and the strategy works, but it's not going to work 100% of the time. So let's talk about the dark side, because dark times will come, but they're not going to be dark at all if you cut your losses quickly. And like I said, the win rate's over 70%. So as stated, my plan on Friday was to buy puts when it hits this 384 level for the gap close reversal, right? So let me show you a 2-day chart. I'm going to show you what the dark side looks like, right? So it filled the gap, it had a reversal, right? So gap close reversal, we know to take profits towards the previous day highs, which was right around here. And also you can leave some on to hold for this gap to fill below. Once it fills the gap below, you have to scale out because it can have a reversal, right? It's a scalping strategy. Now, this is the dark side of the strategy. If it does not work at our levels, right? So right here, this is where it retested. It even worked again, which is crazy because at 386, when it tested 386, the second time it worked as well, but you only do it the first time. You do not do it when the gap closes. That's when you do it. You do not do it again after that. You do it right here. And then it works. When it retests, you do not do it again because that is not the strategy. It is then just a resistance level. It is nothing special. It only works, and it's only special when the gap fills the first time. If it goes the second time, do not do it. The gap filled here. When the gap fills and it reacts bearish, you play the puts. When it retests, reacts bearish, don't play the puts. Do not do it again. But this is the point that I'm making. Let's say that the strategy didn't work. So let's say SPY fills the gap the first time, I get my bearish reactions, I play the puts. It doesn't work. What would that look like if the strategy didn't work? Well, let me show you. If it starts breaking above the gap right here, this is when it starts to break above and you're getting in literally at the top. So it's nothing crazy, right? Not a lot of risk. You get out if it starts breaking out. Now, if you want to, you can figure out your max risk and risk a tiny little bit more. But if it's forming higher support, if it's pulling back and forming higher support like it did above that 384, right? See how there's higher support when it pulls back, it starts to go up. You must get out. Respect the max pain. Do not risk above the gap when buying puts. Do not risk below the gap when buying calls. Get in as close as possible to the gaps, because if you are incompetent and you don't respect the max risk, and if you don't respect that, if the strategy cannot work at the best setup at the best price possible, you will have a very big loss. Those days will come if you don't cut your losses. Look at this. This would have been a massive loss if my strategy didn't work, right? If my strategy didn't work, this would have been a massive loss. If I were to look at the price action, when it broke above 384 and formed higher support, it went all the way to 389. Isn't it interesting how once this gap, resistance, breaks out and reacts to support, what does SPY start to do? It starts to go parabolic and fill the next gap that's waiting to fill above at 389 to 63, which is why I told people that I'm laughing at bears that we should not be playing puts. The strategy already worked once. Do not do it again, because that's not how it works. And I told people right here, I made it very, very clearly. Remember, the best level for puts from here is 389.63. I'm not making any trades. And we had a lot of people bank both ways on puts and calls. I didn't play calls because I trade the best sets, the best prices. People would tell me, well, what do you think about calls? It's at 385, it's at 386. What do you think about calls? Well, as stated in my key levels, if you wanted to buy calls, you can buy calls right here on the second trade plan at 379.38, gap to fill below. This is key support level, an unattractive level for puts. This is where you want to buy calls, right? So why are you interested in buying calls at 385 when I got you at the exact bottom, right? Guys, you need to trade the best setups at the best prices. Do not trade the worst setups at the worst prices. Like, come on now. But you need to be able to read price action. You need to understand that, okay, if 384 breaks out and forms a floor and reacts to support, SPY is going to start breaking out and it's going to start to fill the gap above. This was all so predictable, man. This was absolutely amazing, man. But look, this has truly been the best and one of the easiest trading weeks. That's another thing, man. I received a comment, someone who they were basically like saying, this is so easy. Wow, you're such a good trader. Look at how easy that was. I'm like, that's the point. That's what I'm trying to do. I'm trying to enter the trades that are so easy to win. It's like you can't lose, the easy money. But this is all strategically planned in advance. If you look at a lot of the trades that I actually made, I didn't even need to use a confirmation on them and they still would have worked. And my entry would have been 10 times better and I would have made a much bigger return. Another thing I'm working on as well is to identify and confirm on when it makes sense to not use a confirmation on a trade and just get in due to the price. That's a thing I believe in. I'm going to narrow it down and set it up in a way where it makes sense to do that. Obviously it'd be a starter position, but you get a lot better entry. I bought puts at 383. Imagine if I bought puts at 384. I would have been up 100% by the time I was up 50%. Plus, I'm exposed to less risk because my entry has at a better entry. So think about that, man. I'm working on developing strategy where you don't even need confirmation. So, how can you figure out if you don't need a confirmation? Well, if SPY already crashed at the gap in the pre-market right here and right here, isn't that confirmation that it's already struggling and reacting as a resistance level? Therefore, when it spikes back up, we should just try the puts and get the best entry instead of waiting for the pullback, right? So that's one way to do it. Another way to do it, right, is to aim for the best levels. It is very likely the first time SPY goes to 390 that it has a pullback because it's the previous support level. The macro is going to tell the micro that it should pull back and it's at the gap. So overbought gaps and oversold gaps, very, very likely without confirmation that they're going to have some sort of short-term reversal for scalping opportunity, right? So it's about the levels you choose and also understanding in the pre-market. The pre-market will help identify, it's already crashing from this level. Well, there we go, right? So those are two ways I'm going to be using to actually take starter positions without using without using market open confirmation and just getting the best price. And then if the trade starts to go in my favor and I get more confirmations as I'm in the trade, then I will add the full size I plan to do. So initially I can get in at the best price, potentially the best price possible, with very little risk. And if it goes against me, I'll just get stopped out. I'll put in like 30% of my size initially, something like that. And then as it starts to work in my favor, I'll scale in the other 70%, 57%, right? So that's another thing that I'm developing. But man, I just find it interesting. I find it interesting how people aren't optimizing for the best thing to be doing with their trading. Why aren't you optimizing for a strategy that gets you in at the exact bottom for calls for reversal and the exact top for puts for reversal? Why are you interested in trading in between the chop? All this chop This is where the battle is. This is where the fight is. This is where the struggle is. This is where the poor risk to reward ratio is. This is where the poor entry is. This is where all the chop is created. This is where you're going to get wrecked. People like me are selling, taking profits up 50%. While you're sitting at break even, fighting the middle. You're not even fighting the trend. You're fighting the middle. Like, good luck, man, fighting that chop. Like, I'm doing something that's as easy as it can possibly get, and you can scale it. The catch is you must be consistent. You must be disciplined. You must strategically plan out everything in advance. My planning is more time than my actual trading. Watch my live trading videos. Trades, 3 to 5 minutes, 30 to 50% returns on same days, right? Sell way too soon. I'm well aware, but I'm a scalper. In terms of creating those plans, it takes a lot more time than 3 to 5 minutes. You got to wait a very long time for the channels to develop. You got to wait for the stocks to gap up. You got to wait for the stocks to gap down. When they do gap down, when they do gap up, when the channels do develop, you must be aware that they have developed. Then you have to set the price alerts. Then you have to figure out in advance, okay, is this a key level where I should just take some starter size if there's no confirmation, right? Or should I just wait for confirmation, then start scaling to my full size? You must strategically plan this out like a game of chess, all beforehand. That's where all my time is spent. It's not spent in the actual trade. Before I enter my trade, I know exactly where I'm going to enter. I know exactly where my profit targets are. I know exactly where my max risk is, and you stick to it no matter what. No matter what. It's not about trying to be right. It's about respecting, okay, this is my max pain. This is my profit target. This is my entry. That's what I'm supposed to do. If I do not do those 3 things, then I'm incompetent. I deserve to lose money in the long run, right? If you want to get the life you deserve, you must be deserving of it. And I'm showing you how you can be deserving of it by setting up a system. You must create a simple trading system with an edge. Your trades must be so easy that people should be laughing. Watch, as time goes on, people are going to be laughing about how easy this actually looks and like how easy these trades actually are, because that's the reality of this, man. Once you're consistently doing the same thing over and over again on the same stock with the same niche, so what's your niche? My niche is trade and SPY. Well, what do you do with SPY? Well, I wait for the channels to develop, and when it gaps down, when it gaps up, I know where the gaps are going to fill. Then I set price alerts at the higher end of the gap and the lower end of the gap. Then I look for reversals at those gaps, and then I'm a scalper, so I don't hold too long. I go with same day expirations usually. I stay with at the money strikes. That's my niche, and I narrow it down, and I master that one niche with the channels, with the gap strategies, and I'm the only one doing that. So if I consistently do that same thing over and over again, and I don't go jumping around with different strategies, and I put all my time and focus into planning that one strategy, into approving that one strategy, into figuring out how can I make it better. Like right now, I just discussed on ways on how I'm planning to enter without a confirmation. Because the reality is, if I would have entered without confirmation, I would have made double the profits. I would have been exposed to less risk with higher reward. So I'm trying to figure out ways where, okay, obviously my trades aren't going to work 100% of the time, but how can I make something where with confirmations, where I know with the confirmation it's going to work a lot more without, therefore I can take a starter position and put myself in a more competent trade in that situation, right? So these are all things you really have to narrow down. Once you master one thing, you're going to start to notice all of the small and tiny things that nobody notices, that nobody realizes. People don't even think like that. They don't even think like, well, how can I enter without a confirmation? What are some ways where there technically is a confirmation and I can get in at the best price? Therefore, I can get a better entry before everyone else. Now, it's not going to work 100% of the time, but it's going to work more than it doesn't. Therefore, I'm sharpening my edge because it works more than it doesn't. And when it does work, I get a much better entry with a higher risk to reward ratio. And when it doesn't work, then I just get stopped out extremely quickly and I can look to re-enter the trade. No big deal. Like if it ends up working out, that's the game, man. You have to sharpen that edge. So those are the tips that I'm going to give you. That's what I'm planning to do in terms of all 2023. This is what has led to my success. It's a simple gap trading strategy. And the question is, who's going to use it? Who's going to put the time in and create the plans? Who's going to be disciplined and competent enough to stick to the plans? Who's going to respect the max risk? Who's going to size in accordingly? Who's going to scale out at the profit targets? Who's going to get the best entries? Who's going to only do this one thing? I know who's going to do it. Guaranteed I am, because this works, right? So just ask yourself, man, if you're competing against people like me, who's going to win? The one who strategically is focused in narrowing down to one thing, or the guy who's all over the place, trading a bunch of different stocks, trading a bunch of different strategies, has no edge, has no strategy, has no foundation that actually works? All I have to do is just wait. I just have to wait for these channels to develop. I just have to wait for these gaps to form. And then once those price alerts trigger, I will know my exact trading plan. I will know exactly where to get in, exactly where to set my max pain, exactly where to set my price target. So I'm gonna leave it off with that, man. That's the path that I'm headed on in terms of 2023. I am locked in, I'm dialed in, and I am focused on this one simple gap trading strategy. The reason why I'm optimized for this strategy is because it gets you in at the exact floor, at the exact bottom when it works. It's a trend reversal strategy with call options. You'll be buying at the lower end of the channel, the most oversold part of the channel for the gap close reversal. And then the inverse for short selling. So for short selling, you will get in at the exact top where it reversals, at the exact top of the resistance level, right? So you're getting the best entry. Not only are you getting the best entry, but it's towards the top of the channel. If you buy puts at the exact top of resistance, you will have a very high risk to return ratio, a very high profitability trade, right? And if you buy calls at the exact bottom, you'll have a very high risk to return ratio, a very high profitability trade. But if you try to buy the breakout, more risk, less reward. If you try to short the breakdown, more risk, less reward. That's why I don't do that. I don't do it. I don't do that. I'm putting myself in the highest profitability trade where it just has to work, and it works the vast majority of the time. It has the highest risk to return ratio. It has the highest return, and I'm doing it on one ticker. I'm doing it on SPY. Why SPY? Because it works very, very well with SPY, and this is where all the wealthy people are at. All the wealthy people are trading SPY. It has the largest liquidity. There's no limits to what you can do with SPY. The scalability is endless with SPY. The liquidity is there. You can buy thousands of contracts. It's there. You can get to that level. You can get to that point, man. It's crazy. I made over $17,000 last week just making like 4 trades, and the position sizes were less than $12,000. That return is absolutely insane. You've seen the trades, 30%, 50% in a couple single minutes. Imagine putting $1,000 into each trade, making $500 a couple minutes later. That's the game. How many times do we do it? A couple times a week. Sometimes there's going to be 5 opportunities a week. Sometimes there's going to be 2 opportunities a week, right? You have to adapt. You have to adjust. You have to say, okay, there's only this amount of opportunities this week. That's all I'm going to trade. Super disciplined approach. And I'm entering the easiest trades possible that have the edge of that high risk to return ratio. I'm doing what's best for my portfolio. So that's the game, man. I'm putting you on to it. And if you do want to be a part of this, man, it's the first link down below in the description. Within Trader Society, I trade these live with my team. These live trades that you see on my channel, those are from my live streams. Those are actual live streams. Those are not voiceovers. Those are not recordings. Those are highlights. Those are clips from my actual live streams that I do within Trader Society. The members get access to the actual live stream in real time. They get access to the full live stream, the recording of it. When the stream's over, they can rewatch it. They also get access to the voice channel. The voice channel is 100% real time. As you know, live streams can have 10-second to 30-second delays. Well, guess what? You get the Discord voice as well. That's 100% real time. You also get access to the chat room. You also get access to the video lesson library, the course. It's live trading on stream every single day. Nobody's doing it the way I'm doing it. And a lot of people, they're just texting in chat rooms and all this other stuff. This is live trading. If you want to see me do this live trading in real time, this is the place to be, man. It's the first link down below in the description. This is the lowest it's ever going to be priced. It's a one-time fee. It's lifetime access. We'll be trading live every single day the market's open. With that being said, I will see you guys tomorrow live at market open.